The question is, and the question we always get is, where do we see the market 12 months from now, 24 months from now? When's a good time to sell? This is L. Warner with Retail IntEL. One of the things I get asked about more than any other question is, where are interest rates going and how is that going to affect commercial real estate? Even with the Fed fund increases in rates, we still saw price per square foot for retail centers grow from $400 a square foot in 2020 to over $500 a square foot. Now, cap rates have gone up, but the reason why the price per square foot have gone up is because there's been a significant amount of NOI growth because retail fundamentals have been so strong. To get a little bit more into commercial real estate, in a more normalized year, there's about $400 billion of real estate that sell annually within the four major food groups: retail, which is the smallest piece, multifamily, industrial, and office. Now we're looking at levels of around $60 billion per quarter, which translates to $240 billion. So we're off a more normalized year by 40 to 50%. So volume has significantly gone down. So people ask, well, volume's gone down. Does that mean pricing has come alongside of it? The reality is pricing has slightly decreased, or cap rates have slightly increased, because there's not a lot of supply. In a more normalized market, there's $6 billion of retail assets that sell per month. In July, it was only $2.8 billion. So that's a rather large decline from where we were previously. Owners of retail shopping centers, because fundamentals are so strong, which means vacancy is down, market rent is up. You don't want to sell right now because you're generating more income. So why would you take it to market and take any decrease to where you think the value of the asset would be at some point in time? So the supply is still significantly constrained in the commercial real estate market, which is keeping pricing pretty strong. The question is, and the question we always get is, where do we see the market 12 months from now, 24 months from now? When's a good time to sell? I'll tell you, from our perspective as a team, we've closed over $200 million in the month of August. We're seeing that same trend in September. We've closed 3 deals this week. And the assets that we're selling are all across the board. There are stabilized assets in Southern California that we've generated 22 offers on, most of which are all cash, and they're trading at really aggressive pricing, or maybe even where we were prior to the pandemic rise. We're seeing value add deals in the Southeast that are generating 16 offers and buyers going hard at execution of the contract. We're seeing core grocery anchored shopping centers in the Northeast that are trading sub 6 cap with limited growth. Why I say that is because we're seeing it play out in real time, where demand is greater than supply and is keeping pricing strong. So when asked again, is pricing going to go up as interest rates go down? There is no direct correlation between the Fed's fund rate and the 10-year Treasury. Now, while we do think that they're somewhat aligned, if supply materially increases and demand remains the same or also increases, if it doesn't increase at the same speed, you may have an environment where Fed fund rate goes down to 3.5% in 2025 at the end of 2025, but your cap rate might not be materially different. So from that perspective and what we're seeing heading into the fourth quarter of 2024, we do think it's a phenomenal time to take your assets to market. To be honest, I wish we had more assets to sell. From a buyer's perspective, it is a good time to buy just in general. High level, the retail market is incredibly strong just from an asset class perspective. I always say that the pandemic proved retail's resiliency. And why I say that is because prior to the pandemic, people felt that retail was a dying asset class. But the worst thing happened to retail. People could not leave their house and go and shop in certain locations, but yet retail survived. So coming out of the pandemic, it was an asset class that was incredibly favored. And because of that, new institutional capital coming into the space, first-time private capital coming into the space. So I know that demand's not going anywhere. So if demand's not changing and supply is slightly increasing, I think that we're in for a very good next 2, 3, 4, 5 years within the retail sector. There is no changes in fundamentals that I think will discourage the space. And the final thing I'll leave you with is retail is one of the few, if not the only asset class that currently has positive leverage, which means that you're able to borrow debt at less than where the cap rates are.